Fearless Disease.
At the end of a week of wild swings, what have we learned about this trade, or is this just sort of a blip in the bigger AI trade, Tim? What do you think?
Before they get into it, what's going on, Fearless Disease fam? Today we expose the truth they hate to hear, like right now. If you are ready, I love this clip right here. Man, we had some good moves over the last week when it comes to trading. If you were in the stock market, but if you weren't, why are you watching this video? Micron earnings blow out with AI memory demand soaring and profits have doubled. Expansions to stock up to at least about 5%. Let's hear what the professionals have to say about it.
Look, I think the last month has been important in terms of evaluating free cash flow from companies that were gold standard by looking at the debt markets, by assessing the dynamics of, does Oracle have funding? Are the Blue Owls of the world sticking by? There's other folks that are, that's emblematic of a broader story. I do think that hardware, in the case of Micron, they told us that they were actually seeing spot prices, that which they could price out 2, 3, 4 quarters, that kind of visibility. The fact that you saw a rebound on a day when you had a triple witching, I know Steve watches this stuff too. I mean, you had enormous volume. You had, I'd say, some incentive for where dealers were positioning to be on the right side of the upside today. And I do think that was part of today's move. But if you're watching kind of the short term between now and, yes, dare we use the Santa Claus rally dynamic, I think it feels pretty good. I love this bounce off the 50-day. Nothing to me has changed in terms of the fundamentals, and the key fundamentals are that demand is there, the Fed is your friend, and you continue to see investors pouring money into U.S. equities. U.S. fund flows have been great this week.
Yeah, Mike.
I love it. You see that big dip, and then every bounce back. We are up almost 7%, which is awesome. I know I said 5, but I know we're actually at 7%. I'm human, but up almost 7% is actually awesome. I knew at the bottom it was going to tick right there, and then people were going to get into it. It was going to go straight up. Usually happens around this time of year. Well, not usually. Usually around this time is usually like a really always stays dip, and then it may come back up after January, February. But you see, it came back really quick this time, and we love it, man. It's awesome. If you were in it, if you were in buys when it dipped down that small, I mean, hey, you had a killing. The AI serves is fueling a lot of growth in data right now. The center's needs they're really exploding. Data, and when it comes to data and AI, is really exploding. As you saw before, it was, let me go back a little bit, it was Oracle. Oracle is actually looking really good. Let me get to Oracle. See, I can go right to it. It was Oracle. Let me get the right number. I want to make sure we have the right number. Let's see. Did he already pass it? There we go. Oracle, we looking at 6.63% going up. That's AI. So AI is looking wonderful. I would get AI as fast as you can right now. That's not financial advice, but I would definitely get into AI faster, sooner than later. Let's just say that. Sooner than later, I would definitely get into it. Let's go ahead and get right to the rest of the video. Let me see what else they have to say.
The Fed is your friend, and you continue to see investors pouring money into U.S. equities. U.S. fund flows have been great this week.
Yeah, Mike, what was the role of today's huge expiry, $7.1 trillion in notional, and the impact here? I mean, you would think that Friday would be quiet because it's the Friday before a holiday shortened trading week, and yet it was very heavy.
It was very heavy.
Yeah, well, I think you're right that normally when you're just taking a look at a pre-holiday weekend, you're going to see reduced trading volumes. But when you have an expiration like a triple or a quad witch, you have a lot of expiring contracts, and that often means that you've got positions that need to be rolled to subsequent expirations. And so that tends to fuel a big uptick in volume. We certainly did see that today. But I think the positive I took away from today's activity was the fact that the volatility indices, both on the NASDAQ and on the S&P, came in pretty considerably. And it was something I was looking at earlier this week that had been troubling me. I think it's looking a little bit better right now.
Exactly. When he said talking about a lot of people that ending contracts, that's people that's in the stock market. They're doing options and everything. They had a lot of contracts within that Micron, so they had to get rid of them. And right before the holiday season, you don't know what's going to go on. Most times it's going to dip down. So people were up there just selling or buying, but most likely they were buying. They was getting rid of that. They had to do what they had to do. Even S&P 500 you see on here was up 1%, and almost the same exact thing that happened over Friday was the NASDAQ. It jumped really high, but it stayed in that mid range. It just went straight up, and then all it did was go sideways for the rest of the day.
Steve?
I think when you look at this, you have Oracle that everyone was worried about the debt issues. Then you had sort of a reset, all the bloated names, the quantum names, AI names, and everyone wanted a reason to spend again.
Yeah.
Or not spend, but to invest again. So you have the end of the year, you have the Santa Claus rally coming on. You had to get that fluff out of the market. So I think the fluff came out of the market, and I think it came out of the market enough so that people can get back to investing. So if they're back to investing, they're going to buy what they know again, because if you look at energy is not a big enough percentage to move the overall market. Industrial is not a big enough percentage. Tech is 40% of the overall market. So if you're expecting the market to go up, it's not going up without technology. So people are going to go with what the most widely held names are and what they feel comfortable buying with a pullback.
Right.
Very true. S&P 500, NASDAQ, US 30, Oracle, Micron, technology, AI, that's what really drives the markets. So if you're not going into those main markets, I need you to be able to jump in there. Technology and AI is going to be booming for the rest of our life. There's no way around it.
But within that trade, I mean, it's a huge group of stocks here. We did see distinctly today hardware names do better, in particular semiconductors. Was Micron's guidance enough to make you think maybe the safer, quote unquote, safer area within the AI trade would be the areas, the companies that have visibility for the next 2 years? I mean, the guidance that Micron gave was phenomenal in terms of how much demand there is for the next 2 years.
Correct. And the demand is a huge part of that, but also they're in a really good position to be able to pay down their debt when you look at their cash flow. And I think that's a big part of this, because I don't think the AI trade is over by any means, but people are really starting to question the companies who don't have the cash flow to support all of this build out that's going on. So I think that's where we're going to see this bifurcation happening in 2026, is the companies who have the cash flow to support it and those who don't, because I think investors are becoming increasingly wary about that. And you bring up a good point. I mean, when you look at tech and information services, that's over 45% of the S&P 500 now. There's a lot of concentration risk, and I think a lot of people are really waking up to that and realizing that. So I think you want to start to look elsewhere. I don't think this trade's going anywhere, but is it going to have the kind of outperformance it did in 2025? I don't know.
Very true. I like what they're saying, especially towards the end. They don't know if they're going to have the right amount of money for them to be able to really show that they be able to invest as much into AI, which makes a lot of sense. I don't think that it's going to do anything to the regular people like us that are just putting in money. I think the more money we put in, they'll be able to have those finances to be able to create whatever the stocks they want to be able to grow with. 100%. It's all about gambling sometimes, especially when you go into stocks. But I don't think AI or technology, of course, not going anywhere. We already know that. My prediction so far is Micron's going to go to at least 150 by mid 2026, around May, June. AI chip demand is unstoppable right now. It's gonna blow up really fast. I would say get in it as fast as you can. You already know. Smash that like. Tap that next video on the screen, man. And subscribe and hit that bell. CashApp, FearlessDisease is always in the description if you are rocking with the movement. See you on the next one. Stay rich and stay fearless.